All right, we've got some serious buzz happening in the crypto world today, and we got to dive in.
Yeah, the SEC just dropped a bombshell. They're allowing options trading on Bitcoin ETFs.
This has the potential to be a real game changer, even if you're just dipping your toes into crypto.
No doubt. But let's back up for a second. Before we get into the why, we need to make sure everyone understands the what. We're talking about Bitcoin ETFs and specifically the ability to trade options on them.
Right, because for some people, ETFs might as well be a foreign language. So think of it like this. Imagine a basket of assets all tied to a specific thing, in this case, Bitcoin. That basket is an ETF,
Exactly. It lets you essentially invest in the performance of Bitcoin without actually needing to mine it yourself or whatever.
which honestly sounds way too complicated for me.
Right. And the beauty is we're not talking about some small-time operation here. Giants like Fidelity and ARK Invest are jumping into the Bitcoin ETF space.
Yeah, these are major players, and it shows how mainstream this is all becoming.
Which brings us back to why this SEC decision is such a big deal. They're not just saying, hey, these ETFs can exist. They're opening up a whole new toolbox for how people can engage with them.
And that toolbox, my friends, includes options trading. Now, I know what you might be thinking. Options. Sounds complicated.
It can be, but at its heart, an option is just a contract that gives you the right, not the obligation, to buy or sell something at a set price by a certain date. Think of it like reserving a concert ticket.
You might decide to go, you might not, but you've got that option locked in.
Exactly. And with Bitcoin ETFs, you can have options to buy, those are calls, or options to sell, those are puts.
So you're basically betting on whether you think the price of Bitcoin will go up or down.
In a nutshell. But the real beauty is that it allows for so much more strategy, whether you're looking to hedge your bets or potentially make some serious gains.
This is where it gets juicy, people. But we're going to take a quick break, so don't go anywhere. We'll be right back to break down exactly what this means for you and your crypto game. All right, so we're back. And before the break, we were talking about options trading for Bitcoin ETFs and how this could be huge EE for investors.
Right. And when most people hear options trading, they think it's this super risky, high-stakes game. And while it can be, it can also be a powerful tool for, managing risk and hedging against those wild Bitcoin price swings.
Okay, hedging, let's break that down. That's where a lot of people get tripped up, I think.
Yeah, for sure. So let's say you've got, I don't know, $1,000 invested in a Bitcoin ETF. You're bullish long-term, but Bitcoin, man, you never know when it might take a dip, right?
So a roller coaster for sure.
So you can buy what's called a put option. This basically acts like insurance for your investment.
Insurance. You mean like if my Bitcoin ETF goes belly up?
Kind of. So let's say you buy a put option for, say, $50. That option gives you the right to sell your ETF at a certain price, even if the market price drops below that.
So it's like a safety net.
Exactly.
Yeah.
You're limiting your potential losses. Now, it's not foolproof, but it can provide some peace of mind, especially if you're worried about market volatility.
Okay, that makes sense.
Yeah.
But then there's this other side of options, right? Like the potential to make some serious profit.
You're talking about strategies like covered calls. And that can be a whole other way to leverage your Bitcoin ETF holdings.
Okay, so walk us through that one. What's a covered call?
So you already own shares of a Bitcoin ETF, right? With a covered call, you're essentially giving someone else the right to buy those shares from you at a predetermined price by a specific date.
Okay.
Now, here's the thing. You get paid a premium for doing this. Think of it like renting out your shares. They pay you rent that's the premium for the option to buy them later.
Interesting. So even if the price of Bitcoin doesn't move much, you still make some money off of that premium.
Exactly. But there's a trade-off. If the price of Bitcoin goes way up, higher than the price you agreed to sell at, they get to buy those shares at the lower price and you miss out on some potential profit. But hey, you still made money from the premium.
So it's like a balancing act. You're potentially sacrificing some big gains for the security of that premium.
Exactly. And look, options trading isn't for everyone. It requires research, understanding your risk tolerance, all that good stuff.
Absolutely. But here's what's got me really intrigued about all of this. It's not just about individual investors, right? This whole SEC decision, it could have huge implications for the entire crypto landscape.
Oh, absolutely. We're talking about a potential shift in how Bitcoin is perceived and, more importantly, how it's regulated. This could be a major turning point for the whole industry.
Okay, so let's unpack that. What kind of ripple effects are we talking about here? Ripple effects, huh? Okay, so spill the tea. What are we talking about here?
Well, for starters, this move by the SEC is huge for Bitcoin's overall legitimacy. It's like the Wild West of crypto is finally getting you know, some regulations, some guardrails.
Okay, so it's getting serious.
Exactly. And when big institutions like Wall Street types see that, they pay attention.
Because guardrails mean safety, and safety means they can finally justify getting in on the action.
Right. This whole ETF thing with options on top, it makes Bitcoin much more appealing to institutional
So
investors.
we could see even more money flowing into the crypto space.
It's definitely possible. And that's not even mentioning the potential for other crypto ETFs.
Oh, right, like beyond Bitcoin.
Exactly. Ethereum ETFs are already being talked about, and then there's like DeFi, NFTs.
So many options. See what I did there?
Huh, I see it. But really, the point is, this SEC decision could open up the floodgates for a whole wave of new crypto investment products.
Wow, okay, so more investment, more legitimacy. This is starting to sound pretty positive.
It definitely has the potential to be. More institutional money usually means more stability for the market as a whole.
Right, because right now, Bitcoin can swing like crazy, which scares a lot of people off.
For sure. But with more players, bigger players, those swings tend to smooth out a bit. Not saying it'll be boring, but, maybe a bit less like riding a roller coaster.
Okay, so potentially less volatility, more legitimacy, more investment opportunities. I gotta say, this SEC decision is looking pretty impactful.
It's definitely one for the books. We're witnessing a real evolution in the world of finance, and it's exciting to see how it all plays out.
Exciting is definitely one word for it, maybe a little nerve-wracking too.
For sure. But that's the crypto space for you, always keeping us on our toes.
Absolutely. And on that note, we're gonna have to wrap things up. But before we go, I want to hear from you all. What do you think about this SEC decision? Head over to our social media and let us know.
Yeah, join the conversation. Tell us, is this a step in the right direction for crypto? Let's discuss.
Until next time, everyone, stay informed, stay engaged, and stay tuned for the next deep dive.